stand out here and show you the building. Our building is in very bad shape. The building is in a little bit of trouble. We have been told that we are short on our insurance. Hey guys, so if I look stressed, it's because I'm very stressed, and I unfortunately did not sleep at all last night. Very rarely in my life have I never slept at all. So I've been talking to you guys about what's been going on with my building and how awful it is living in a Miami condo and all these insane expenses that we're getting hit with right now. So last night we had a Zoom session where, if you were an owner, you could attend it, and the board of directors there and all that. We have been told that we are short on our insurance. So, for example, we were told our budget was something like 1.4 million. Is that right? 1.4 million for the year. And in fact, it's like 3.5 million, something like that. So we knew that we were short on that. We were told that information a few months ago. But we were also gaslit and told by the board that they were going to get a line of credit, they were going to get a loan, and that we would be able to pay back the increase for the shortfall in the insurance, which of course is yearly. But you don't want to get hit with that all at once out of nowhere, especially where you're making up for it, what should have been the normal maintenance from the beginning of the year to the end of the year. So we were told we were going to have some sort of loan to cover that amount. And that didn't end up happening because the building was not able to get a line of credit or a loan because of the condition that the building is in. So the building is in such deplorable condition that the building actually was not able to get a loan or a line of credit to get us through the year with the insurance, and then have it where we pay that back a year and a half, whatever. So I don't even quite understand this, but apparently the option was to pay this in 6-month increments or 8. I don't even understand how we got to 8. It's like if we're told there's no loan, there's no loan. I have no idea exactly how that works. Maybe something to do with like a bank or interest. I'm not quite sure. But they appear to have agreed on the 8-month option. And then of course, obviously, when you get into the new year, you will have a New Year's set of insurance. It's a never-ending thing. So we were told that, so I'm making this video, it is July 14, and starting essentially August 15, we are going to have a assessment of $875 a month through the next 8 months or something like that. 6 months, 8 months, I don't even know. I can't even tell you the exact information because that's how unclear they talk to the residents. So to give you guys a little bit of a recap of the situation, I live in sunny Isles Beach, Florida. That is in South Florida, which is Miami. My building as of last year had a maintenance of $390 a month. This year, that amount went up to about $600 a month, and that was supposed to include the cost of the building, cost of operating, as well as what we were told was the insurance for the building. We also have $161 a month assessment for a contractor to bring the building up to 50-year recertification. That contractor is off the job because the building got into some sort of dispute with them. So we have no contractor, no work being done in the building, paying out $161 a month maintenance assessment for that work to be done. And that's over years. And we don't know essentially if that's the amount. We don't know if the new contractor, who, when, if, when they show up, the amount will be higher and all at once situation, which is what we're fearing because the building can't get loans because the building's in deplorable condition. We went from a $600 a month, our current situation before last night was a $600 a month maintenance plus the $161 assessment, plus then we have a problem in the state of Florida ever since the Surfside building collapse where the building has to have its full reserves. Our building is assessed at something, we think $5 million, it could be less, and apparently we have no building reserves. So we have to make up for the reserves, which could end up being, again, a one-time payout. Figure it's gonna be probably $8,000-$9,000. It could be over a year added in plus everything else you're paying. And now we have a situation where we're paying out this $875 assessment a month to the end, through the end of the year. and then maybe 2 months after, to get us through the shortfall of the insurance. So basically our maintenance this year 2023, should have been something around $1,035. I calculated it out, instead of $600, and that's how we got into the situation now of having this shortfall of $875. So next year 2024, the best case scenario would be a maintenance, because everything goes up, building costs, having to pay the maintenance people here who don't do anything. It could be $1,200 a month. Best case scenario, unless the insurance, who knows what they assess the building at, plus hopefully the contractor amount won't change. And then you have the problem of the reserves, which could end up being $700-800 a month for a year. And we are all very worried. Last night on the Zoom session, one of the board of directors, he owns a couple units in the building, and he doesn't even live here. And a lot of people were panicking and saying comments in the Zoom session like, what are we supposed to do? What if we can't pay it? And in a cocky way, he basically said, then the building would foreclose on your unit. And he has the nerve to be that cocky. And then I said in chat, because I wanted to call him out on it, you're selling your units. He's making comments like the board's got your back, the board knows what's best, and he's selling his units because he wants out. And it got very hostile in the Zoom session. Pretty much everyone is very, very upset. Again, we don't have entrepreneurs that live in this building. We don't have import-export types of South Florida that live in this building. We have people that work 2-3 jobs, and they were working 2-3 jobs before the way it was before. And it is now very, very overwhelming as to how we are all going to pay our bills. We're all very worried in that concept. Is it important to try to get rid of this now before some assessment comes that you have absolutely no way of managing? Because again, assessment doesn't have to be over months. It could be an all at once required amount. There's a building in South Florida here where the unit owners were assessed $175,000 assessment, and then it got lowered maybe to half of that. Basically, I think everyone's walked from the building and you can't even get your money out of the building. So this is quite a problem. When your monthly costs of owning a unit become very close to rent, you start to say, why am I doing this? Guys, so I'm gonna just continue this video and walk and chat with you. So I just got off the phone with a realtor. That was kind of like the break in filming. And so basically we have a situation where the building is in a little bit of trouble. I personally believe that and it's what the insurance company would say as well. So I'm trying to be a little bit more quiet as I film this, because yesterday was the Zoom session that kind of went over the situation. Not even all the residents know about what's going on, and kind of like, in a sense, all hell has broken loose, which would be expected. Couldn't even get into the office to give them the assessment check for a current assessment because the door was locked. So there's condo docs. Why would there be condo docs? That's for a unit that's selling?
That's when you sell.
Was that for a contractor? Why was it so many people? All hell has kind of broken loose because we are a poor building. It's just there's no other way to say it. We're a poor building. We're not the entrepreneurs that live in the oceanfront buildings here. I had a pretty optimistic conversation with a realtor who knows how things work in Miami-Dade. Let me stand out here and show you the building. Our building is in very bad shape. We had a contractor walked off the job, or we were told that, but in reality the building's in litigation. They were arguing over money, I don't even know. So no contractor, still being assessed, and our expenses here have gone up astronomically, where we are now essentially paying out, certainly on the low end for rent, but paying out on the low end for rent while you're owning, with the bigger issue being you just never know with a building like this, in a situation like this, what you could be assessed next or what the true financial story is of a building. I had an optimistic conversation with this realtor. This realtor sounds very good. So that is an option. because the other option right now was to hold out. But the problem is, when you're holding out, you just don't know what could come next. You don't know if you could be assessed a amount that clobbers you. From talking to this realtor, they implied, and I'm going to go on what they're saying, that those things like assessments can be taken care of at closing. Obviously, the more money you have to take care of those things beforehand, the better. But yeah, it was a promising conversation. Yeah, I'll try to show it to them also. And the way it left with the realtor is that I'm going to start to organize and fluff my apartment, because I was not intending to sell. And you know how it is when you live in an apartment, it's crazy. So I need to do my part now to make it, it's never going to be stageable, but just clean up the best I can, just to start to get maybe some professional advice now on what to do. It's good to know that there's options right now. Building is in terrible shape. I believe that, well, it's not just I believe, one of the reasons that the insurance company said the insurance is so high, and one of the reasons we could not get a loan, is because of the deplorable state of the building, and that's what they said. So that's not just me talking. A troubling conversation. I literally didn't sleep last night because I was so worried, and I was also very worried about this concept of, I think I was misinformed with that, where I thought that, yeah, that you had to pay all assessments before. I'm reading one thing, but she's saying no, and she has experience with having that taken care of at closing, that you don't have to take it out of your pocket. Yeah, it's been a rough evening. I'm glad I had a helpful conversation with this realtor, because it is the type of realtor you need for a job like this. It's all irrelevant. My dad was talking about the situation of the halls and the way the hall works and the elevators and all that. You know, that was part of everyone going nuts last night with the Zoom call. And oh, by the way, the board directors, they just like hung up on us. So they literally ended the Zoom chat. They're like, we're going, bye. And it's like, okay, so maybe so are we. So a lot of people are selling. The realtor was also able to tell me other people are selling, which we obviously knew of, but others that are coming on the market. And I'm gonna go back inside because it's very hot out, and number two, the camera's overheating. So now the decision I have to make is, one, sell. And then if I sell, am I staying here for a while? Am I going to Orlando? Just straight to Orlando? How am I handling the next step? So yeah, I appreciate you guys watching. It's been a very rough night. I appreciate you all very much watching. If you would like to support the channel, please do subscribe. Click the notification bell, like the video. I also have channel memberships. That's a great way to help and support the channel. So thank you so much for watching. I really appreciate you. And I will see you soon in my next video. And I will probably be doing more of these videos, because they say film what you know, and this is kind of what's happening right now in my life. So stay tuned for more updates. So I will see you soon in my next video, and bye.